Let's talk about taxation. I think it was Benjamin Franklin who said, there's only two things certain in life, death and taxes. But that's not actually the case, because the taxation system, income tax, was introduced in 1799 in Great Britain. It was introduced as a temporary measure to fund the Napoleonic Wars. So income tax hasn't existed throughout human history. It's a relatively modern thing. One of the things you must understand about tax is while it is the law of the land, you have an absolute right to pay as little tax as legitimately possible. But you must exercise that right. The revenue aren't going to ring you up every year and say, by the way, did you claim this? By the way, did you claim that? Did you know you could claim your refuse charges or whatever it might be? That doesn't happen. You have to get the knowledge, become aware of all the various tax concessions that are available, and use as many as your circumstances allow. That's how you get to a point where you pay only the taxes you must pay. I quoted statistics before on the podcast about Irish taxation and the fact that the revenue report to the PAC regularly that Irish people overpay taxation. The last number I remember reading was overpay taxation by €500 million a year. That's 1,800 quid a year per person working in Ireland. And if those people claimed those benefits and saved that money towards their retirement, it would be €250,000 or thereabouts in wealth generated. You have a legitimate right to pay as little tax as possible. The other thing to say is that often you may think you're paying as little tax as legitimately possible, because you have a view that if I could pay less tax, surely somebody would have told me so. Surely my accountant would have told me. But this goes to a fundamental misunderstanding of the role of our accountants. I often joke with my own auditor that he's a debt collector for the revenue and I pay his bill, because I understand that his statutory obligation, number one, is to the revenue authorities, number two, to the limited company, and he has no statutory obligation whatsoever to me, the shareholder. So if I talk about a particular way of saving an amount of tax, I often get, well, why didn't my accountant tell me about this? And the answer is, the revenue do not benefit by you saving tax. Your limited company doesn't benefit by you saving tax. You're the one who benefits. Of course, income tax isn't the only tax that we are made pay here in Ireland. We pay capital gains tax. We pay stamp duty. We pay VAT. We pay inheritance or gift tax when eventually our parents or the previous generations leave us assets, which, by the way, they've already paid huge amounts of taxes on. And yet we are charged a huge amount of tax again. Is tax fair? Not for me to say. Should you obey the law of the land? Absolutely, you should obey the law of the land and pay the taxes you are due to pay. But you shouldn't necessarily pay excessive taxes. So what can you do? There are many different legitimate ways. I had a story about this that I've told before, but I'll tell it again. And this was, I had a client years ago who was an egg farmer in Monaghan. And the egg farmer was writing to the revenue saying, I'm manufacturing eggs. At the time, there was a huge difference between manufacturing income tax rates and normal income tax rates. So his argument was he was manufacturing eggs and therefore should be on the lower rate. Somebody with a sense of humour in the revenue eventually wrote to my client and said, unless you have wings and feathers, you're not manufacturing eggs. The chickens are manufacturing the eggs. You're farming the chickens. So my client didn't take this well and decided to set up a manufacturing company to manufacture egg boxes. He manufactured the egg box at a cent per box. He sold them to the farm at $5 per box. And he stripped all the profit out of the farm into the manufacturing company and claimed the lower relief at the lower rate. It didn't work for him. And it didn't work because the Irish revenue have a tool in their bag that they can use at their discretion. And that's a tool that refers to a thing called aggressive tax avoidance. So if an inspector thinks that a particular action, as legal as it was, is equal to aggressive tax avoidance, was done solely for the purpose of reducing tax, they can dismiss that tax break, charge the taxes that would have been due, and charge late payment penalties too. So my Monaghan farmer ended up paying more tax than he would have. When I met him, he was able to tell me this story, and I introduced him to a number of legitimate ways of reducing tax that couldn't be accused of aggressive tax avoidance. When it comes to tax, paying as little tax as possible, there's a trick, and the trick is to look into the future, ask what's likely to happen in that future, and take actions today that will de-tax those events in that future. So it's about planning. If you come to me and say, I have a 10 grand tax bill, what should I do? The only advice I have is pay it, because that's happened yesterday. That happened in the past. It's impossible to change the past. It's far easier to change the future. Think of it, if I stood up and walked out the door in front of me here and I turn left instead of right, I've changed my future. That's how easy the future is to change. Could I stand up and change the way I walked yesterday? No, the past is unchangeable. So the route to paying only the taxes you must pay is looking into the future, deciding what's likely to happen, and taking actions today that legitimately reduce those tax liabilities. And I can assure you, there are many, many actions that many of you can take that will de-tax your future. How do you find out about them? That's where you come in. As I said earlier, it's up to you to claim these benefits. The revenue won't tell you about them, but I can tell you who will tell you about them. Top class, properly educated financial planners. It's not the role of your accountant to help you save tax. It's the role of your financial planner to help you save tax. They're the people you need on your side. They're the people who have the knowledge, the skills, the experience to guide you through all the various legitimate tax concessions that are available so that you pay as little tax as possible. And of course, the direct impact of paying as little tax as possible is you keep more of the wealth you earn, you invest more of the wealth you earn, you grow your wealth to getting to the eventual target, which, as I've mentioned before, is financial freedom. Tax is the greatest liability in your life. It's the greatest liability in all our lives. So if we can reduce that liability, our financial objectives are far easier to achieve. Keep listening in the future. As I've predicted before, we will bring a number of these podcasts to you. Some will be like this one, which gives you ideas perhaps on how to save tax. Some will be where we interview third parties who are providing bespoke products or services to the market. We'll let them tell us what they do. We'll let them tell us the benefits they deliver to their customers. And we'll let them tell us the fees they will charge, arming you with superior knowledge information so that ultimately, as I've said before, you can better choose, better instruct, and better question the financial advisors in your life than you have been able to do before.